A year to forget. Remembering the 2022 decline, the S&P 500 faced a tough year in 2022. It dropped by 19%. Many investors felt the pinch. It's important to understand why this happened. We can learn from the past. The market doesn't move in one direction forever. It has its ups and downs. 2022 was a reminder of this. It is crucial to remember that investing is a long-term game. Short-term fluctuations are normal. What matters is the overall upward trajectory. Understanding the reasons behind market movements can help us make informed decisions, especially during turbulent times. Unraveling 2022, forces behind the S&P 500 drop. Several factors contributed to the 2022 decline. Inflation was a major concern. It eroded purchasing power. This made investors nervous. Interest rates also rose. The Federal Reserve took action to combat inflation. Higher rates make borrowing more expensive. This impacts company profits. Geopolitical tensions added to the uncertainty. The war in Ukraine shook the market. Supply chains were disrupted, energy prices surged. These factors combined to create a perfect storm. Investors became cautious, they sold stocks, pushing prices down. It was a challenging period for the market. Echoes of the past. Market crashes throughout history. The 2022 drop wasn't an isolated event. Market crashes have happened before. The Great Depression in the 1930s was a major downturn. The dot-com bubble burst in the early 2000s, and then there was the 2008 financial crisis. These events remind us that markets are cyclical. What goes up must come down. But it's important to remember that the market has always recovered. History shows us that over the long term, the stock market tends to go up. This is why it's crucial to stay invested. Panic selling can be detrimental. Section 4. Looking ahead, a glimpse into the future of the S&P 500. Predicting the future of the market is impossible, but we can look for clues. Current economic indicators suggest uncertainty. Inflation is still a concern. Interest rates remain high. The geopolitical landscape is complex. These factors could weigh on the market in the short term. However, there are also reasons for optimism. The economy is still growing. Corporate earnings remain strong. Technological innovation continues to drive progress. These factors suggest that the market's long-term prospects remain positive. Section 5. Navigating uncertainty, advice for the prudent investor. So, what should investors do? First, don't panic. Market fluctuations are normal. Second, stay invested. Time in the market is key. Third, diversify your portfolio. Don't put all your eggs in one basket. Fourth, invest in quality companies. Look for strong fundamentals. Finally, be patient. The market moves in cycles. Ups and downs are part of the journey. By following these principles, investors can weather any storm. Remember, investing is a marathon, not a sprint.